Welcome back to the Malaysia Money Matters show, everyone. It's the 28th of May, 2025.
Great to be here.
Our mission, as always, is to take the sources you've given us and, well, really dive deep to pull out the key financial and economic insights for the day.
Exactly. We'll sift through it all for you.
We're kicking things off here in Malaysia, looking at some important company news, and then we'll broaden out to the international and political picture shaping the markets. Ready to unpack this?
Absolutely. It's definitely been a busy period. Lots of earnings reports, some strategic moves locally, and, the global trade dynamics are still causing ripples everywhere.
They really are. Okay, Malaysia first. We saw some pretty strong bank results. AMMB Holdings, for instance.
Yeah, they hit a record net profit, didn't they? RM2 billion for FY 2025. That's up about 7%.
Solid growth. And they're signaling confidence, too, planning to keep that 50% dividend payout. That's actually up from 40% last year.
Right. And Alliance Bank also posted a record full-year profit, RM 750.7 million. What's really striking there, I think, is their loan growth.
Oh, yeah. How so?
Well, it was 12%. That's basically double the industry average. So it looks like they're, grabbing market share quite effectively.
Impressive.
And they're also proposing a rights issue, aiming to raise about RM 600 million. That should definitely strengthen their capital position.
Good to see the banks doing well. Now, shifting gears a bit, MN Holdings. Wow, what a quarter for them.
A stellar quarter, absolutely. Net profit more than tripled to, RM 16.69 million, their highest ever quarterly profit.
And revenue more than doubled, too. They put it down to faster progress on construction projects, particularly underground utilities and substations.
And crucially, for MN Holdings, they just landed a new RM 52.5 million data center job down south.
That's significant.
It really is. It's not just a big contract. It really highlights, the investment pouring into the data center space here. That's a major growth area right now.
Definitely a sector to watch. We also saw some strategic stuff happening. FGV Holdings, for example. Analysts seem to be recommending shareholders accept Felda's takeover offer.
Yeah, at RM 1.30 a share. They're calling it a fair exit price. It's about a 10% premium over the volume-weighted average price for the past year, the VWAP.
Right. And Felda's goal is to get over 90% ownership so they can delist the company, isn't it? This is their second try, I believe.
That's right. So it offers a clear way out for shareholders if they want it. On the other hand, though, Sime Darby flagged weaker core performance expected for FY 2025.
Oh, really? Why is that?
They cited global uncertainty, volatility, and competition, especially hitting their motors division. So a bit more cautious there.
Interesting contrast. Shows how different companies are exposed, right? Speaking of market shifts, there's some buzz around the FBM KLCI index potentially changing.
Yes, the index review. Sime Securities is suggesting AMMB Holdings might replace Hong Leong Financial Group.
And the reason?
It seems Hong Leong Financial Group might not have passed the liquidity test. Basically, their shares weren't traded actively enough recently to meet the index rules for easy buying and selling. And AMMB Holdings, well, they're ranked 27th by market cap and seem to meet all the criteria for inclusion. We should get preliminary results on that very soon, early June.
Definitely something to keep an eye on, given how index changes can affect fund flows. Quickly, we also saw Central REITs buying some retail units and parking bays.
Yeah, RM 70 million in Mont Kiara from Sunrise. They expect it to boost 2025 earnings. It'll be funded by borrowing, so their gearing ratio will tick up slightly from about 44.6% to 46.1%.
Got it. And some other positive results too, right? Dillium, Greatech Technology, Next Screen Global, Valesto Energy all had profit increases.
That's right. Good quarters for them. The Malakoff core saw profits dip linked to lower energy payments.
Okay, let's zoom out now to the bigger global picture. Trade tensions are still very much front and center.
Absolutely. And Asian leaders, with Malaysia's PM Anwar Ibrahim chairing, reached a consensus. They agreed that any bilateral trade deals individual members make with the U.S. shouldn't harm other Asian countries.
Interesting dynamic. Anwar actually requested a meeting with U.S. President Trump on this.
Right. And meanwhile, the EU is scrambling to speed up talks with the U.S., trying to head off those threatened 50% tariffs, especially on key sectors like steel and autos.
It just shows how sensitive everything is to trade policy right now. China reported its industrial profits held up in April, despite the tensions, but the market reaction elsewhere was, well, noticeable.
Yeah, Asian currencies pulled back a bit, including the Malaysian Ringgit, which fell about 0.3%.
Right.
There are definite concerns about U.S. fiscal health and, protectionism.
And this uncertainty is even feeding into central bank thinking. Minneapolis Fed President Kashkari basically said he wants to hold U.S. rates steady until there's more clarity on tariffs and prices.
Yeah, especially with inflation concerns still lingering. And adding to the uncertainty, U.S. core capital goods orders, which kind of signal business investment plans, they tumbled in April.
Not a great sign. And amidst all this,
Global bond markets saw a bit of a rally. The U.S. 30-year yield actually dipped below 5%. Seems driven partly by talk of Japan adjusting its debt sales and just general worries about government finances globally.
okay, so a lot happening. We've covered record local profits, strategic plays like FGV, that potential index shift, and this really uncertain global trade backdrop. What piece of news today feels, I don't know, most significant or maybe exciting to you?
That's a good question. Well, for me, I think it might be the potential change in the FBM KLCI index. AMB Holdings possibly coming in, Hong Leong Financial Group potentially going out,
Why that one specifically?
because index changes have such direct, measurable impacts on fund flows and investment strategies right here in the Malaysian market. It's a concrete market event with clear consequences.
Yeah, that makes sense. It's definitely got tangible effects. I was leaning slightly towards the MN Holdings story myself.
The record profit and the data center win.
Yeah, just because it feels like such a clear example of where real growth is happening domestically right now. It really spotlights a sector that's, benefiting massively from current trends like digitalization.
That's a great point, too. Shows a specific growth engine firing up. So two different angles, one on market mechanics, one on underlying sector growth, both really important.
Exactly. It really shows how local company performance and these bigger global forces are constantly interacting, creating these shifts you need to navigate.
That's the key takeaway, isn't it?
It is. So the final thought for you, our listener, is this. How might these potential index changes or the outcome of these ongoing global trade talks, how might they reshape the investment landscape for you?
Something to definitely ponder.
Indeed. And to keep staying informed on all these vital financial topics, please do subscribe to the Malaysia Money Matters podcast.
We'd appreciate that.
Thanks so much for joining us for this deep dive today.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.